Hello, everyone. A very warm welcome to exciting episode of Psychology Talks, and this is the first episode of the new year. So, whoever has joined or whoever is listening, either live or recording, a very happy new year to you. So, we are starting this year with a very interesting topic, and this topic is about like investment and capital market. A lot of people do not find a link between psychology and investment and capital market, as most of the people think that it is all numbers and it is all about like math and like about the calculation and predicting that how the market will behave. But it is like when we delve deeper, when we actually study, it is all about mindset. It is all about how we can manage our thoughts, our mind, and have a proper mindset which can help us make more money, or to, I would say, that grow our business. And that's why I'm so fortunate today to be joined by our esteemed guest. He's Peter Goldstein. He is a CEO of Exchange Listing, founder of Emmis Capital Fund, and author of The Entrepreneur's IPO. He is a seasoned capital market advisor, over 35 years of experience as a C-suite executive in public and private company. He specializes in guiding emerging growth businesses through the complexities of accessing capital, completing IPOs on NASDAQ or NYSE, and thriving as public companies. And he has he's an expert on this field. So I'm so excited to hear an insight from him. So welcome, Peter. Thank you so much for joining us today.
Ambreen, great to be here with you and with the audience and to kick off the new year of your podcast together. It's a great honor to be here. And I love the topic because mindset to me is always critical in everything you're doing. And in this discussion today, I look forward to really kind of diving in deeper with you around exploring the role of the mindset in investing, both from the company side and the investor side, because I sit on both. And I think it's a unique opportunity to get perspective that can add value to the audience, whether you're an entrepreneur or an investor or just somebody interested generally in the mindset of investing.
Yeah, absolutely. And we'd love to hear more insights on that. So before we actually start the discussion, I would like you to give a little bit of introduction, and it actually to tell our audience that how did you start your journey? Were you dreaming of becoming a capital investment expert, or you landed up with some fortunate or misfortunate steps or events in the life? So tell us a bit more about it.
Yeah, and Brandon, a journey is a great word. I think for me, I'm stemming close to 4 decades of experience as an entrepreneur. And of course, I can't say I had a master plan to be a capital market and IPO advisor. But I did always have this understanding that I wanted to be in business for myself from a very young age. And I didn't quite always know what that would be. And so my background comes really first as an entrepreneur. And I started my first companies in my 20s, in my early 20s. And I was benefiting by my first exit at the age of 30. And so I'm now 61. So I've had this experience of being involved with building my own companies as a founder and having exits both privately and inside of the capital markets. And those insights have included working as an investment banker, working on the buy side and the sell side with M&A, with capital formation, and led into where I am now, exchange listing. I started about 5 years ago. And every business that I started over the course of the last almost 40 years has been with one central theme, that there's a product and a market fit, meaning I found niches where there are opportunities to expand the need in the market by providing a product or a service. And that's what exchange listing has really done. We work with entrepreneurs all over the world who have a commitment to wanting to go public. Our focus is on the US stock exchange. And then I also work as an investor. And that journey has been developed and continues to develop
Mm-hmm.
As an entrepreneur, life and the markets are very dynamic. And I think one of the key themes that I can bring to this discussion is about adaptability and adjustment that I've taken in my journey, but that I think is critical from a mindset perspective, both as an entrepreneur and as an investor.
Yeah, that's very interesting. I think a lot of people have that skill of being an entrepreneur, or they need some freedom to work, right? But I think the system keeps us busy, and to go on the same track, like which, let's say, society has created or something. Like, you need to go on the 9 to 5 job and to earn money and do some. But in order to liberate that thing, like a lot of people even kill their desire to become, like, to gain that freedom. And which I think you mentioned that, that you had that desire from the beginning to become an entrepreneur. So I would like, before like we go more on further on the discussion of IPO, I would want to understand that how you overcome or how you follow that desire to become an entrepreneur, like, because especially most of the time people have, like, usually have the pressure to follow the 9 to 5 job or to earn money, like, through different ventures. So how did you do that?
Yeah, I think it's a combination of two things, Ambreen. One that I believe is a common set as I look at entrepreneurs and I look at founders and the community that I work within globally. Ambition is a critical aspect. So, for me, what that means is some inner desire, some drive, right, that really has you want to not just set goals, but to work towards meeting and in times exceeding and having, an outstanding level of success that is driven by some kind of a desire for ambition. And I think ambition, if you really study inside of successful traits of entrepreneurs, that will be towards the top of the list. And then I think the second one that is critical alongside with that ambition and desire is commitment. Right.
Yeah.
And it's really typically now, because you and I have a similar focus. We work with entrepreneurs, we work with founders, we work with CEOs. And if that commitment, another way of looking at it is purpose, right? So what is that commitment or the purpose that drives you? And you need to be really present to that. It can shift over years, it has with me. But whatever the advice that I can give inside of the shift from entering into entrepreneurship and entering into the next stages of growth and evolution always starts with, what are you committed to?
Yeah, yeah. That's, I think that's very critical. I think even to follow anything, ambition and that desire, that burning desire, is the foundation of doing or achieving anything in life. So that's very critical. So I just want to understand also, like, especially when I was, I would say, young, and I always used to think that capital market and investment is all about numbers, right? It's like predicting the market and all through numbers and like a lot of graphs and a lot of data. But then as I evolve also, like, it's basically found out that it's more than numbers. So I just want your perspective on this, that what do you think it is? And then I would also want to know that how this mindset can help us understand or sustain our growth in that capital market.
Yeah. So if you think about it, Ambreen, it's really in a balance of numbers or analysis, right? So we're taking an analytical perspective and we're balancing that with the psychology. And then you have emotions and your own emotional component, and you also have the emotions and psychology of the market.
Yeah.
As an example, herd mentality. There's a clear belief that herd mentality is not based on numbers. It's based on psychology and people taking, and that's typically driven by fear. And then fear begets people to follow that herd mentality, which can often lead towards a very irrational approach. So that's not a numbers driven approach to investing. That is clearly a psychological or emotional. So, risk perception can be driven by both analytical and, of course, the emotional components. So there's a fear factor is always there, fear of loss. And then there's the flip side, which is the allure of gains. And so, it can be looked at as greed, and greed drives, a lot of decision making, as does fear. So I think it's impossible to separate them and say, well, it's either one or the other. I think this is a clear case of and, right? So it's analytical, financial analysis, market intelligence, and then understanding, the framing of those opportunities and the decision-making processes that go along with them.
Yeah. I think that's very critical to. I love the way you said that. Some these irrational beliefs and irrational response to some maybe chaos in the market or something. And I think that's very important to understand that what's happening in the market because of those irrational, let's say, responses. Let's say maybe because of the fear or surprise or excitement. Let's say if some companies started to launch something and then the entire market gets excited and it started investing in that. And we know that sometimes like those who know the market intelligence, they know that this hype is just creating a bubble, it's going to burst soon. But it is important to understand these things. So what advice would you give actually? What would you suggest that how we understand that psyche of market, to understand those maybe irrational beliefs or irrational responses to those events?
Yeah, I think I start, Ambreen, with a strategy for just really having good market intelligence. So in other words, do your homework, right? Don't just rely on information that's provided to you. I think there's a critical importance as an investor where we start is on due diligence, right? So really making sure we understand properly all the components and then stay within your strategy and your own risk tolerance, right? So the necessity to stay informed, have market intelligence, and align that also with your investment goals. So, we can talk a lot about the strategies for resilience inside of volatility. And I think that's also in this world where we live today, there's continual changes and shifts, right? We've got wars occurring, we've got geopolitical shifts. Today, if you look at California, it's sad, right? People are losing their homes. It's really horrible. And so, this, I think, unfortunately, the world is increasingly complex. And that complexity then lead towards our needing to overcome those, fear factors, those realities of what's happening in the market, with being able to stay informed and stay inside of your own strategy. And we can drill down further on that. But I think, overcoming inherent fears is critical to having the confidence in making decisions. And then those decisions you want to make by a blend of your strategy and the analysis of what you're getting from the market by informed decisions, which could also come from third-party experts, as well as from the company's information that they're providing directly that could impact how you make your decisions.
Yeah, absolutely. Like being a marketing research consultant, I know that I always tell people that, do your homework, understand the market, because that is the only way to gain insight and be ahead of the competitors. Since you are an expert on IPOs, so what the major thing that, like, when I speak to the entrepreneurs, although they've been growing faster, and then of course there's one ambition to get one step ahead, or to go one step further, to get to do an IPO. But there's always a fear also, especially like when those entrepreneurs try to go for the public. So what they fear is that they lose control also. Like, being an entrepreneur, they have the control, but when the company becomes public, they lose control also. So how do you manage, or what do you recommend, that how they can overcome those fears, and what do you think? Is it really a valid point that they really lose control, or it's just their fear?
Well, let's take the latter one first. The answer is depends on the structure,
Okay.
and so it's not always the case. I work with small cap and micro cap companies, so these are emerging growth companies, and the public markets are an alternative to venture capital and private equity. And one of the benefits of taking a company public earlier in its life cycle is that you don't lose control.
Yeah.
But losing control is a relative component that could tie into your area of expertise in psychology. So there's
Yeah.
voting control, there's operational control, right? There's all different levels of control. And as a CEO and founder, yes, one of the things that you're giving away or trading is ownership in your company for additional capital. And then you have to look at the benefits and the risks and rewards of that. So I break down the IPO journey. As you know, I've written a book about that for entrepreneurs. I've taken my own companies public, and it really is a very personalized kind of vision based upon your long-term goals and objectives.
Mhm.
So while you could look at giving up control, just like anything else in life, there are trade-offs and there are risks and rewards. So, accessing capital to be able to fulfill upon and to maintain your long-term vision becomes critical in this process. And, of course, I start with the preparation. And so the first thing that we look for in the preparation is why. What are your motivations and objectives to want to go public? And typically those are answered with access to capital, liquidity, right? The qualifications that come from knowing that you've gone through the corporate governance to be a public company. These are all critical factors for an entrepreneur. And the truth is that less companies are going public these days. And they're going public because they have access to more capital in the private markets. So going public is not for everybody, both as an issuer and both as an investor. So the compelling reasons around why somebody would want to do that, and then the structure of which they enter into with the investors that they currently have, how they enter into the market, valuations. These are complex kind of variables. So there's no easy answer to this. And what we do is we look at each company on a case-by-case example. But it starts with the CEO, the founder, the management team, and the core shareholders of understanding their objectives and why. And then you can structure and build a kind of customized solution or customized roadmap, which is what we do in working with the CEO. And, I think it's a bigger discussion, Ambreen, around exit strategies. IPOs is one aspect, but you have a multitude of opportunities inside of exit strategies. And I like to talk with both investors and with entrepreneurs about the mindset of an exit strategy and understanding that each company has its own unique life cycle.
Yeah.
So, right. So where are you in that life cycle? I tend to work with emerging growth companies that are on the upside of the curve, right? And there's no understanding of how long that growth curve until you reach some maturity, until you plateau, and then eventually there's decline. That's just the life cycle of a business. So
Mhm.
these are really important factors that come in to whether or not one wants to invest, when the liquidity event may be, what the life cycle is of the company, and then basically to create a clear plan which would result in a positive outcome. And mindset is played in throughout that entire journey.
Yeah, yeah, that's very true. I think mindset is everything, I would say, in everything, like whether you are studying, whether you are just even just for the housewives also, that everything is mindset. Whatever you're doing, whatever work you're involved in, it's all about the way we perceive things. It impacts us, and it's all like keeping ourselves focused on the positivity and keeping our mind open for the possibilities is one thing that we can actually attract, I would say, abundance in life. Since like that you're an expert in this like IPOs, and I enjoy your post also about that. And I remember that one time you actually shared about some cosmetic brand. I don't remember something, but it's a simple brand. I forget the name, but it was like for the 500 million or something like that, and it was very interesting. So tell us a bit um, about some interesting IPOs which you have either studied or encountered in your like personal in your like lives when you were helping entrepreneurs to get the IPOs. Some interesting IPOs case studies.
Yeah, so there are a couple that come to mind that have been done in this recent marketplace. I did not participate in the Reddit IPO as an
Okay.
advisor, but I did study it
Okay.
because I think what they did is a really critical piece of being able to look from both from an investor and from the company and the strategy that they pursued, which was to bring community
Yeah.
into their company. And the way that they position their IPO in a very turbulent market where
Mhm.
companies have not gone to market for fear, part of the mindset that goes into what you're talking about, the ability to be a disruptor, to do something different in a very volatile and uncertain time. And their IPO was incredibly successful. And I think a lot of that was the transparency that they brought to the market with really opening up and describing the purpose of why they wanted to go public. Their disclosure documents, I think, are best of class.
Okay.
And then the way that they weaved in community, Embreen, was really magical, right? All the Reddit followers and the Reddit posters,
Mhm.
were part of how they redefine their tech IPO, and that was with sustainability and user engagement. So they show that a community focused strategy can be vital. It was basically during the IPO, its preparedness, and then its execution. And that underlines how kind of a proactive and adaptable approach during a time where many other companies have chosen not to go to market.
Yeah.
They took a very innovative approach, and it's really one of my favorite examples of
Mhm.
what can be done. And I think the result that's important for the listeners is that they built trust and confidence
Mhm.
in their community, which
Mhm.
is, I like to go out as stakeholders. So stakeholders include, right, your employees, your customers, right, your investors, and they took a very unique approach to build that trust. And that creates what I call sticky shareholders, meaning
Oh,
they're not, IPOs are known for short-term, what they call, flipper investors. These
yeah.
are very dangerous kind of mindset around just investors looking for a quick profit, or if they get caught in the mindset mentality that they just dump their stock and they go away.
Yeah.
So, Reddit's example of building a following, building a community, and bringing that into way before the IPO and
Mhm.
building that trust amongst investors, I think is crucial, not just for an IPO. It's
Mhm.
crucial really for success in having a stakeholder committed business in
Yeah.
this environment currently.
Yeah, amazing. So how did they actually build that trust? Because it's not easy, especially for IPO, like and all the stakeholders. And you're saying that it was not the time, like the perfect time.
Yep.
So how did they do it?
Well, inclusion, so
Okay.
really critical, right? Bring your community in, involve them, engage them, and give them clear, so inclusion, transparency. Be
Yeah.
very clear. Not every business is always going to have that beautiful hockey stick chart that everybody
Yeah.
loves. That's fantasy, and mostly also in my world, it's more of a zigzag, and there's steps forward, and it's business, and steps backwards. So the transparency comes both in the good and in the bad. You're going to have setbacks; things are going to go wrong. So they were incredibly transparent, and then they gave the upside of inclusion to those stakeholders in participating in the IPO directly. So these are all unique characteristics of inclusion, transparency, and involvement with a return on investment. And I think it's a textbook really approach to having a deeper understanding of the psychological dynamic, because if trust is built, then people are looking more towards the longer term, and they're not going to be as reactive in nature if they're a stakeholder of a company for which they trust and they believe in.
Yeah, yeah. I think, yeah, the trust, I would say, is the foundation of every possible relationship, like no matter what, whichever what relationship is. And you mentioned here, like, this the emotional biases, like, the psychological biases that affect the investors. Especially IPO is the time when like the company decides to go public, there's a lot of fear among all the stakeholders, and there's a lot of talks about in the town also, whatever, like who comes to know that, oh, what's going to happen. There are lots of assumptions, there are lots of fears. So what do you think, what are the common psychological biases that affect investor and how they can be managed?
Yeah, I mean, listen, there's a long list. Uh, and the one that I see, actually the two, we've already mentioned one, but the one that I see getting in the way more than anything is overconfidence.
Okay.
And overconfidence from both sides, from the sell side and from the buy side.
Mhm.
And overconfidence comes in a lot of different ways: overstating your company, the performance, the valuation, right? Kind of selling and promoting, if you will. And the same thing can happen with investors. The guidance there really is stay objective, right?
Mhm.
Avoid the emotional decision making, especially in that one where it's contagious. Overconfidence, people get excited, and
Yeah.
then they want to participate, and that builds on that kind of threshold of psychological approach. And so if you have an objective perspective, and you take more of a structured decision making process, it's really an effective way to counteract that bias, and the other one which I mentioned, which was the herd mentality. I think those two things, as I've seen over my years, are the biggest ones that can impact both positively and negatively on the outcomes of a return on investment. So the more you stick to a process-driven decision making and remove the emotional decisions, the more you can manage those psychological biases when they occur.
Yeah, I think that's very important. And as you mentioned, that one needs to be objective. And I think the crucial thing that you already mentioned in earlier, that to remain objective, it is always important to base the decision on the basis of facts that we have. And here, the role of market intelligence play a very crucial role. And whenever people need to take any decision, it's easy to get excited that what's happening around in the market or something, but it is so important to actually base whatever the decision they want to take based on the data that is coming from the market. And it's so important that one needs to have, especially in terms of like IPOs or any investment, or I would say any business, it's so important to stay connected with the market. It's the market evolves like very rapidly. One day something happens and the spectrum, entire things change. So it's so important to know, to have, to be on the pulse of the consumer, the customer, whoever your stakeholders are. You need to be very much well connected to get to make that decision. And that's what like I've learned from all my career of the marketing research. Yeah, what do you think about that?
No, I agree. I think, look, timing is the other element of that, right? Where poor timing, can really affect your returns. And I think what we're talking about while we're focused on investing, it really applies to life. And this is what I like about the dynamic between you and I. You're coming from a psychological basis, and yes, I come from a market background, but the sweet spot in there is everything we're talking about, where you're referring to market intelligence. It's the same with human intelligence, and it's the
Yeah,
same with relational, right? And so having a kind of a balanced, approach to this, so that, in timing, you're not reacting to
yeah,
something, requires that market intelligence. It requires a clear plan. It requires professional advice. I mean, we're talking about market intelligence. The problem is what intelligence do you trust? And
Yeah.
there are all these, conflicting
Yeah.
aspects. And so I like to go back to the fundamentals and try to also check the source and check the
Yeah.
facts around all of this. And that requires some patience, right? It requires discipline. And I think it also requires some clear goal setting and brain, right? So, depends on what your objectives are and how you react to market information and market timing and worldly events.
Yeah.
What's clear is that those worldly events are increasing in intensity and in complexity, right? So, thereby you have to be very, very clear about your own strategy. And again, we're talking about investing, so I could go into, the strategies for investing, but I think with the broad, nature of your investor or your listeners, that this goes beyond investing, right? This goes on into other areas where mindset and understanding your own risk tolerance,
Yeah.
understanding that, that those are critical for your own mindset to be clear on. And if you have the benefit of that clarity, then it really helps you to make more informed decisions, whether those are investing or in charting your path personally or professionally.
Yeah, yeah, you're very very true. That is very important. You mentioned that you actually written a book also. Maybe you like to tell about like why you written this book and what is it about?
Yeah, listen, it was a passion project. It was my COVID project. I found myself, I live part-time in Europe and part-time in the US, and I found myself in lockdown, and as we all did in this strange period of our lives. And
Yeah,
so I looked at, well, what can I do to be constructive and to leave some form of legacy behind, because who knows what's going to happen in the world. And I took the one area that I have deep expertise in. And what I wanted to do, the goal of the book is to be able to educate entrepreneurs who one day have a goal of potentially doing an IPO. And I wanted to demystify what that process is and make it
wow,
accessible. There's a huge misunderstanding. Wall Street is built on around complexity, and some will say around smoke and mirrors. I wanted to have entrepreneurs to have a clear roadmap and
wow.
understand that you don't need to be a unicorn, that you can access the market earlier on in your life cycle. So I wrote a very practical guide. I got the input of experts in my industry, including the NASDAQ, head of capital markets, including members of the New York Stock Exchange, prominent lawyers and attorneys, investment bankers, to provide practical knowledge for entrepreneurs, CEOs, founders, and it's called the Entrepreneur's IPO. I'm happy to give a free copy away and bring to
Wow.
all your listeners. It'll be a
Sure.
digital copy because your listeners are all over the world, and all they have to do is connect with me on LinkedIn, and we'll
Sure.
provide them with a free copy. And it's
Awesome.
meant to really educate, to bring awareness, and to bring around possibility of what is available for entrepreneurs seeking the vision and the goal of being able to ring a bell on a senior stock exchange with a global basis.
Yeah, amazing. And that would be a wonderful gift, I guess. I think everyone would like to have that copy. In fact, I would love to have that copy as well. So I think all the listeners who are listening to this show, please avail this opportunity and please get in touch with Peter. He is so gracious and he will just, he's generously offered to give the free copy. And also, you mentioned about the summit, right? That's going to be planned in April. So maybe you can educate our listener about that. That whoever is interested to attend that summit, I think it would be kind of a masterclass to understand the entire process from all the experts that you may have brought for that summit. Yeah.
Yeah, it's very exciting, Ambreen. So
Mhm.
thanks for bringing that up. So really, it's the first of its kind. We're hosting an IPO summit in New York at the NASDAQ market site in New York City. And the purpose of that is to bring real-time education and knowledge to CEOs, to founders, to entrepreneurs who are really exploring in depth the going process or the going public process. So we'll have really a very dynamic day of education, knowledge transfer, networking, meeting with investors, meeting with investment bankers, and the best industry practices live with a full day. And that will be done, on April 15th at NASDAQ market site. In addition, we're going to do it virtually. So people in different parts of the world who cannot fly in will be able to tune in. And the takeaway will be very practical knowledge and advice with current market intelligence and practices about the process of going public. And so that really is something that's not been done. When there is typically in our industry, you would have investment banking conferences or financial reporting, audit, legal, or the exchange. This is a very innovative, really, I'm not aware of this having been done before, where we're focusing on educating entrepreneurs, founders, CEOs, and management teams in real time in New York at NASDAQ.
Yeah, awesome. I think that would be really, really useful because as a marketing researcher, like to me, the IPO is a very complex. It's a very complex system. I know whenever like I got this request to conduct some researches on for the IPO, it requires months of research and it's extensive. Like we need to collect the data. We need to get in touch with the stakeholders, like with every possible person, whoever is in touch with the business. So it's very extensive and it's very time consuming also, and very rigorous. So to me, it's always like a big thing. And sometimes like because I'm not good at numbers and something, so it's kind of like to be it used to be scary also. But now like I get used to it, that these terminologies, the things that that entrepreneur needs. So it's very interesting. But it is always fascinating to see that how business grows. Like when they go public, it's the small business can have lot of opportunities when they actually opt for IPO, but it has to be done in the right way, as you said, that because if it's not done in the right way, company loses its credibility, its financial stability, and like it is more damaging that in long run then.
Couldn't agree more. Knowledge, preparation, execution. We like to start anywhere between 18 to 24 months away from when the company would receive its trading symbol. And you're 100% right, Ambreen. This is a very complex, chaotic, process with untold variables. And so, part of my role as an advisor is to help teach and guide from all the mistakes that, not just I've made, that I've experienced in the market, and then bring best practices with an ecosystem that is designed to have the companies win and all of its stakeholders. And the opposite can happen if you're not fully committed and focused on the long term and don't prepare properly, don't have the right advisors. It can be detrimental to a company's life cycle. And we see it more and more in this market because of the complexities that are around, the market, and especially for companies that have taken missteps along the way in their preparation and their execution. So it really is a very complex, very dynamic, very what I like to consider chaotic process. It's also incredibly rewarding and gives transformational access to capital, to governance, to visibility, and to awareness that can fuel the growth. If you think about every large company started off somewhere as a small company, right? And not all of them started as a small public company. But the theory here, of course, is that done right, that you can build yourself from a small cap or a micro cap company into a mid cap, into a large cap, with the benefit of having access to institutional capital, both equity and debt, to liquidity that can attract and reward your employees and your stakeholders, and with the corporate governance and transparency that comes from being a public company. So it's a very dynamic process, requires a tremendous amount of thought, preparation, and proper execution.
Yeah, absolutely. I know we can actually talk a lot on that, but the time is limited. So we're actually reaching the end of the show. So before we actually end this show, what advice would you give to our new aspiring investor about cultivating the right mindset?
So, first of all, I'm sad that we're at the end because I think you and I could talk. We could talk for
Yes,
hours here. Um,
absolutely.
for aspiring investors, the first thing I would want to do is have you open up your mind, be curious. So I love curiosity as a focal point because a curiosity-driven mindset is the backbone to, I think, many things in life, but especially as we talk about investing. And to be able to explore and understand what it is that you're investing in and why. And so that's probably the first thing. Then the next piece is a foundation of risk tolerance. I like
Mhm.
to think in following guidelines of low risk, mid risk, and high risk. And
Yeah.
that's different, Embreen, for everybody, right?
Mhm.
So have an understanding of your own risk tolerance, and whether you have 100,000 or 100 million or 10 million or, you know, even less, you want to have an understanding of how you're going to approach your investment and look to take that by percentages. And
Mhm.
that's unique and different for all of us. And then the third part is really understanding the importance of perceiving challenges as opportunities and being able to look at those for the growth opportunities and balance out your approach to investing with your interest and an optimism with fact-driven research and analysis.
Yeah. Yes, absolutely wonderful. I mean, that's the brilliant advice. I would say that basing all the decision on proper strategy on the data, and of course with your own goals. So this is very important that you may have all the data, you may have all the strategy, but what is your goal at this moment, which actually takes you to the further level. So I think that's wonderful advice. So, what is the best way to reach out to you? I know you're very active on LinkedIn. Any other social media site or any other way people can reach out to you?
LinkedIn is really best, Ambreen. It's where I really have built a community there, and I'm happy to connect with anybody. Anybody who wants the book can just reach out for me on LinkedIn and send me a direct message. And if there's other ways that I can be of value to you and to your community, please don't hesitate and feel free to reach out at any time.
Absolutely. Your Peter's LinkedIn profile is also like people can see that it's on the scroll link. So otherwise, I've also shared the link in the comments so people can connect with you. So thank you so much, Peter, for joining and sharing wonderful insight. It was lovely discussion. I was looking forward to it because it was very different from the ones I usually conduct. My other shows, my are usually are more linked with the proper uh, like it's more like psychology based, but this is something very different and I was looking forward to it because it's kind of linked with what I do professionally. So it was wonderful. I enjoyed the discussion so much. Thank you so much for joining, for sharing those insights. Thank you.
Thank you for having me, Embreen. It's really a pleasure, as you know, to bring the diversity, right, with the psychology and with your background and my background and the overlap. And it's something that I'm really, excited about as well, which is, the diversity of the community and the conversation and finding different ways to add value and touch people around the globe.
Yeah, thank you so much. And thanks to all those listeners and the ones who joined us today live, or even if you're watching the recording. So thank you so much for joining and listening to our show. So thank you so much and have a great day.